Welcome to Daily Fortune, where we talk about the latest topic about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so that you'll know when I upload new videos. Now, let's get started. Michael Burry is a successful investor known for betting and risking billions of dollars for his predictions in the stock market. The man who has a track record from 2000 until the first quarter of 2008, and the man who shows how serious he is about his predictions and analyzes every bit of it. Here's some proof. He made millions of dollars for his investors, which had an average annual return of 28.6%. And there's more. In 2005, he bet against the housing market, and he's proven himself even more since then. Though there are people who didn't believe in him because of his unbelievable, more significant predictions, he predicted the collapse of America, which he predicted would impact cryptocurrencies and even metals. His confidence and braveness in betting made him bet millions of dollars for his predictions. There are many reasons you should consider his words, and it is evident how he became so successful. From his track records and some of his wrong theories, will you still believe in his upcoming predictions? Burry knows that for every prediction he made, it is difficult to predict what will happen to the stock. Will it go downtrend or uptrend, and is it even worth the risk? For example, the words like GameStop and the stock market, Wall Street bets, and even Robinhood are words you may have heard in the past year because of the big headlines they made in financial news stories. The statements from GameStop's market share are overstated, and one can say that it is destined to crash. But how could you say that it is bound to crash? It's not easy to consider that one stock will fail because you need a lot of trigger points before you can tell that. Before we proceed to Burry's big prediction, if you are new to this channel, kindly smash that subscribe button and turn on the notification bell to be updated on the next videos. In Burry's prediction, one thing to consider is inflation, because it is linked to all financial matters in society. So yes, we will highlight the word inflation in this video. Burry said that the government's MMT-influenced policies are encouraging inflation. In 1992, Warren Mosler, an American economist, and Bill Mitchell, a university professor in Australia, developed MMT, also known as macroeconomic modeling theory. This concept is tied to the production of money or printing money to solve the economic crisis. The government doesn't need to borrow money because it has the power to produce money based on demand. If the economy is in a severe crisis, printing money is the answer, but it can simply pull back through taxes, and there is no need to print as much money when the economy is rising. Though FED, the Central Bank of America, currently uses that, there are still people who disagree with this kind of idea that is connected to the impacts of MMT. FED Chairman Jerome Powell highlighted the FED's mission, and that mission is to keep the financial system stable and promote full employment. On the other hand, Warren Buffett, a well-known critic of MMT, said that one of the reasons why it lacks full acceptance is that the same old proposed solution led to disastrous inflation in countries in the first half of the 20th century. Those countries are Hungary, Poland, Austria, and Weimar Germany. According to Thomas Sargent in the 1982 classic, those four significant inflations ended because of the printing of money and monetizing debt. With the debt-to-GDP ratio reaching all-time highs, this only harms the country. The GDP serves as the income in the debt-to-GDP ratio. Therefore, a high debt-to-GDP ratio may only suggest that the country isn't creating enough to pay off its debt. M2 has hit an all-time high, which means that the economy has produced more than enough money to cover such debt. Banks will not be able to lend the government the additional resources to pay off their debts if debt levels are high. This will lead to increased taxes because the government cannot deliver the services they need to. And when there is an increase in taxes, this will result in lesser consumer spending, affecting businesses by cutting their income, causing them to lay off staff. Everything is affected by the increased tax. But something is confusing people because rather than seeing failing businesses or firms, many establishments were booming. The rising PMI charts see the evidence over the years. This means that the government's debt could be paid off by using other available resources without relying on printing more money as the only solution. Hyperinflation is the word that could explain this situation. Burry believes that the only explanation is its existence. The lack of supply even when the economy is booming. How could you explain that? Burry related the situation to what happened to Germany in the 1920s. He said on his Twitter that the prices in that country were steady. Businesses and stock markets were both booming, and the exchange rate of the mark against the dollar and other currencies rose for a time. He recalled how only the wealthy people could survive from those circumstances, and for poor people, this situation pushed them to commit crimes as a final resort just to cope with rising prices. In his tweets last February 2021, he said that the situation in Germany in those times when they were not aware had truly built and prepared for that tremendous blow from the impacts of hyperinflation. Burry said that people would only notice and believe in the obvious collapse of the economy. Still, hyperinflation could cause more panic for the common people, as they could have difficulty allocating funds because of a lack of money even if everything around them is booming. There is already a collapse when that happens. But here's the good news. Even when there are times that you could experience difficulty, there are still measures on how to protect what is yours and sustain your daily needs. There are what we call assets, like lands and pieces of jewelry that appreciate over time. But as Burry said, the government will do everything to control all those assets or any assets available to the people. Burry also tweeted on February 18, claiming that governments will take steps to squash competitors in the arena in an inflationary crisis. Those are bitcoins and gold. Others might disagree because Bitcoin is decentralized and cannot be controlled by the government. Burry knows the long-term effects of crypto. He described how the rise of crypto was built on leverage. That minor price drop may result in a big price drop. He ended up tweeting this statement. If you don't know how much is involved in the run-up, you may not know enough to own it. Then what could be the only method to lessen the effects of hyperinflation, which is expected to harm the investments that we consider the safest and most secured? Remember these 4 important words to the crash of the market: capital cost, input cost, pricing power, and interest rates. Capital costs are costs connected with one-time investment on the acquisition or enhancement of a significant fixed asset like land buildings that will be of use or benefit for more than one financial year. Meanwhile, input costs are costs incurred to create a product or service. It is essential in a hyperinflationary environment to invest in companies, especially those that know how to optimize capital expenses while minimizing input costs. So you have the power to change the price for pricing power. And according to Warren Buffett, it is the most crucial factor. The ability to flexibly change a product's price without losing to the competition. That's what makes your business a good one. The raising or lowering of the price of a product impacts the demand for it. Then for interest rate, it informs you how high the cost is to borrow money or how high the rewards are to save money. So basically, if you are a borrower, the interest rate is the amount you are charged. Borrowing money as a proportion of the entire loan amount is how people who are quick to fail in an inflationary-driven environment fall even further down. They have more obligations by borrowing money and acquiring loans to survive a crisis. Burry evaluated these factors when he bet on stocks he strongly believed due to a crash like his bet against Tesla. He thought that Tesla is running a business with a high interest rate because major companies have a lot of debt in order to run the business and maintain its operation. He thought it was ridiculous that people were all betting on the companies rising even higher in the market. To his surprise, people were correct when it rallied and rose to 700% in pricing from just a 500% jump before taking a hiatus in April 2020. Burry's predictions are sometimes wrong, even though he is known for being suitable with almost all of his predictions. This just shows that there is fundamental uncertainty in the stock market. Anything is possible. You can surf over the difficulties in inflation, but you can't just disregard the main indicators of a crash. It's important to analyze investments properly and bet wisely. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, please don't forget to hit the notification bell. See you next time!